Now, for a closer look at tech transformation in China's financial system, let's bring in Dan McClory, Managing Director and Head of China at Boustead Securities. Welcome back to the show.
Thanks, Rachelle.
Now, it's been 2 years since Tencent launched WeBank and Alibaba launched MyBank and others followed. How are these private internet banks performing so far?
Well, it's been an incredible influx of capital. They have topped any expectation whatsoever of the amount of assets. For example, Alipay has come up with about $200 billion in deposits in a relatively short period of time. So there has been a rush to these apps and to these online alternatives for banking that frankly didn't exist, 4 or 5 years ago.
So what are some of the differences between the types of customers who tend to gravitate towards online banks versus traditional banks?
If you were to segregate the market, you would probably say that the traditional large banks worked primarily with big state-owned enterprises and maybe did secured lending, perhaps having to do with real estate. Whereas the online banks have filled a very important void, which is spare cash that you or I or anyone in China might have in their account. It's much easier just to sweep it and transfer it into one of the online banks, have it earn, quite frankly, higher rates of interest than you would at one of the 5 largest state-owned banks. And the convenience of it and the ubiquitousness of being able to conform and enter into transactions with your phone has just been, it's been nothing short of phenomenal. Let me put it this way, Rachelle. Right now, it is more than 50 times the volume of what's going on in the U.S. And the U.S. likes to think it's leading a lot of industries. China is leading online banking and online payments by a wide margin.
That really is staggering to look at. So as we look at these internet banks competing with traditional banks, is it more of competition or do they in fact complement them by taking on some of the business that big banks maybe don't want?
I think it's a little of both. I think the big banks initially were perhaps dismissive or didn't realize what the online banks could do. And again, in e-commerce, we've seen this in China. I mentioned mobile payments. But China is just at the vanguard of all of this activity. So it was almost predictable and almost inevitable. So they have filled a void in smaller sized deposits and transactions. But the big banks have actually started to push back and perhaps attempt to influence government policy so that the maximum amount that can be held in some of these online accounts has steadily decreased from a billion RMB to 250 million, from a million RMB to 250,000 to now just 100,000 RMB. So they've actually started to put some caps on the amounts that you can put into one of these online accounts.
So then speaking of government policy, how do you think that's going to shape the future of the internet banking industry?
Well, let's just say, Rachelle, that there's a trend in China which is towards a cashless society. And again, further ahead than maybe some countries in Scandinavia that were predicted to go cashless. The U.S. is certainly behind in this regard. So I think the trend has already expressed itself and it's already being seen and it's already being experienced. So I don't think you come off of that trend. I think the physical banks and the incumbent banks have to find newer ways, like we heard from our correspondent in Shanghai, of offering services that are in demand. But frankly, a lot of the younger generations in China, they are compelled to use the best app for their bank as opposed to a bank that has a lot of physical branches or where their parents may be banked.
So Dan, as we're seeing a lot of these traditional banks seeing competition from some of these online banks, they're obviously trying to upgrade their systems and become more tech savvy. Is there a chance then that traditional banks could end up edging out the internet banks?
I think it's extremely unlikely. And I say that in all respect to these incumbent big 5 banks in China. I just think that let's talk about why this could happen. The alternatives for payment system and money transfers in China were very limited, as opposed to other westernized nations where there were many and there was a lot of competition. Because they were limited, that was actually a factor that has allowed some of these new tech startup banks from the big 3 tech companies in China to really come in and garner market share in a very short period of time. So I think it's, Rachelle, a structural and a systemic opportunity because there was not that much banking infrastructure that was as open as it was in many other Western countries.
All right, well, thank you so much, Dan McClory, Managing Director and Head of China at Boustead Securities.